internet sector is booming. Whether you're shuffling through your favorite playlist, scrolling through online deals, or endlessly swiping through social media feeds, these activities are a huge part of daily life for many, with no signs of slowing down. Which areas within this space ultimately could be poised to see even more growth? And how are corporate strategies shifting to adapt to the latest trends? I have to say that joining me today and making his Fidelity Connect's debut is equity research analyst David Cochrane. David covers the U.S. internet sector, which includes areas like digital advertising, social media, and music. A warm welcome to you, David. Good to see you.
Thank you so much. I'm happy to be here.
We're delighted to have you here. And everyone joining you here today is more than welcome to send questions in for David over the next half hour or so. Okay, so we mentioned some of the key areas that you spend your time on. Let's go through them a little bit. Advertising, digital advertising, massive changes there. But what does covering the internet sort of include? Let's go through this.
Yeah, so I mean, some of the big buckets are digital advertising, and the big models within that are social media businesses. So Facebook, Instagram, Snapchat, all this type of stuff. E-commerce is another big bucket, Amazon, the big player there. And then I cover a host of consumer subscription internet businesses like music streaming and online dating and things like that. So super dynamic space.
Do you ever take your eyes off the internet, or what do? You have to like...
I live in the internet. I'm following internet stocks. It seems all encompassing.
So we're going to ask you all about those things. Let's dive into some of the really interesting, the big names, but they're really they are in the Magnificent Seven, and they've had some massive turnarounds. We have been following the valuation story on some of these big social media companies as they sort of dragged through 2022, made big changes, and have really risen like phoenixes over the last little while. Tell us sort of the biggest stories out of this particular valuation process.
Yeah, I mean, it's been a very fast evolving space, I guess I would say, over the past couple of years. 2023 represented really a return to growth with a new sidekick, which is cost discipline. But maybe if we can go back, think about in COVID, a lot of the demand drivers for these businesses, advertising, e-commerce, consumer spending, were really hot. And the businesses were experiencing massive growth. And they kind of ramped up their expenses as they were growing quickly, and valuations got pretty high. And then 2022, things kind of slowed down, and the businesses had all this cost and valuations came down. And then now 2023, you had this rebound, and where we sit today is valuations are more not at the lowest end, not at the highest end, but there's going to be winners and losers from here, this kind of midpoint, and our job is to separate those.
Okay, well, let's go into social media and sort of the winners that probably you're following because you think they are winners. What are the components of some of these companies?
Yeah, so I mean, we can talk about perhaps Meta and the enormous growth acceleration that they've seen over the past year. They've really been the big winner in social media. And so Meta has seen over the past year their growth go from about 2% at the end of 2022 to north of 20%.
I mean, just that in context, 2% to 20% in a year.
A massive growth acceleration.
You don't see that in most companies ever.
Certainly. No, this has been, especially at their enormous scale. So this has been a huge acceleration. And there's been a couple different drivers in that, which play into various trends in social media. The first big one has been the introduction of Reels. So if you're a Facebook, Reels. Reels. So if you're a Facebook or Instagram user, you'll notice the app today looks completely different than it did a few years ago. It used to just be pictures of your friends or their kids or their vacation, and now it's filled with all that, but also a bunch of short videos that they're recommending to you. And those are called Reels. That's Meta's answer to TikTok. And what Reels have done is driven a massive increase in the amount of time that we're all spending on Facebook and Instagram. And so
because you can't flip through them so quickly or something, like you have to spend a whole time, right?
Because they're so compelling. I want to see the pictures of my friends, but I also want to see what this video is. So that's driven huge growth. And in fact, time spent on Instagram rose by about 20% in the US last year. And on a global basis, that number is more like 40%. So a big increase. But what does this mean for revenue? What you saw is when Meta rolled out Reels, we all started spending more time on Facebook, more time on Instagram, but they didn't show us any ads in the Reels. So we were actually seeing fewer ads. What they've done now is they've started to slip in some of these ads, and that's driven a bunch of revenue growth for Meta. And then, another big theme in social media, and also an area where Meta is leading, is they've made a number of improvements to their advertising technology.
Okay. So what was there before, for instance, if you want to sort of compare?
So think of ad tech as the broad area of how do we show you ads that are specifically relevant to you? How do we create tools for advertisers such that they can, automate their campaigns and directly spend in the right areas? And then how do we attribute, if I ended up buying something as a result of seeing an ad, that the advertiser benefited from advertising? Right. And so Meta has made some really big progress on this. One thing they've done is, you see all these headlines about GPU demand for NVIDIA going gangbusters.
Yeah.
One of their big customers is Meta. So Meta made a huge investment into GPUs, and they overhauled their recommendation engines, which are the algorithms they use to determine which ads will be relevant for you.
To search ads.
Exactly.
Yeah.
Oh, exactly. To show what's relevant.
Yeah.
It works. And they also have introduced these AI tools for advertisers that let the advertisers basically hand over the wheel to Meta and say, you spend in the areas that are optimal for me. Yeah. And the small advertisers that I talk to, they really love that. And that's been a big growth driver for Meta as well.
Fantastic. Okay, so what about some of the other, we'll probably come back to ad tech at some point, but what are some of the other, just to wrap up Meta, is there anything else you want to say about that? Because I have a couple other things I want to ask you about.
I think one big thing that we have to call out is the change in the digital advertising backdrop as well. So, every quarter I'm there talking to advertisers, where are you spending money? Where are you not spending money? What categories are good? What tech is working? And, a year ago, advertisers were really nervous. They thought the macro outlook was scary. Are we headed for recession? And so they kind of pulled back their ad spend in advance of that. But what happened?
Things are
kind of hung in.
Seems like
people showed up. People kept spending. And so advertisers have leaned back in. And the environment is just in a much better place than it was a year ago.
And the environment's in a much better place. And we have the introduction of AI, which is sort of threaded through all this. So in fact, during that pullback of spend, actually innovation was happening. Is that fair?
That's right. There was a huge innovation under the hood, and it wasn't really showing up in the growth about a year ago. But you've really seen that come through as the environment has improved. People are taking advantage of this innovation.
So another thing that all of us had our eyeballs spent on because we couldn't leave our houses was, online delivery. These are companies that were bringing us everything we needed, from toothpaste to, a desk at home for a child for school, for homeschooling and so on during the pandemic. Talk us again through some of the valuation stories and how companies have come back in this particular area.
Yeah, I think one of the biggest stories in this area has been Amazon's margins and Amazon's profitability over the past year. So
it wasn't profitable for so long.
It has bounced around, but over the past year, in 2023, their operating income tripled. And they went from losing money, doing negative 2.5% margins in their retail business, to doing positive 2.5% margins in just 1 year. So that's a huge change in a short period of time. And there's really a couple things going on which play into the trends we've seen over the past few years that are driving this margin expansion. The first big one is they're growing into their excess capacity.
Interesting.
So remember at the beginning of COVID, what do we do? We're sitting at home, we're in our pajamas, and we have nothing to do, and we're buying stuff online.
Yeah, and we need stuff because you could go to the grocery store, but you couldn't do other stuff.
We're buying groceries, I'm buying toys for my pets, we're buying stuff for the house. And so during that initial period, Amazon's demand was going gangbusters, right? And they didn't know just how high demand would go. But they said, well, geez, if this keeps going, we better be able to get everyone their packages. Right. So they made a huge investment into their fulfillment network. They doubled the size of it over 18 months. built a UPS-sized ground network over 18 months. And that was a massive investment. But what happened was growth kind of moderated. COVID cooled. We started going outside. We spent money on other things. And so they were left with all this excess capacity and this excess cost.
And inventory?
Inventory fluctuations have been more manageable, but it's really this fulfillment capacity piece. But where are we today? E-commerce is back to taking market share from offline, and Amazon is back to taking market share in e-commerce. So as they've grown into this excess capacity, it's really shone through, or their margins have really come through and expanded. The other big piece of this I would just mention on the same topic is they're getting more efficient, because when you double the size of your fulfillment network, it doesn't all work like a well-oiled machine on day one.
Beginning.
Exactly.
So, and they also have had layoffs. That also has been, they've done sort of cost right sizing that they needed to do. But as you say, the efficiency ultimately has come through here.
Yeah, they've gotten more disciplined on cost in other areas, as you mentioned, and they've gotten more efficient. And their advertising business, which is higher margin, is kind of the third leg of this stool, that has grown really rapidly. So as that's become a larger piece of the business, it's helped improve their profitability.
From Amazon, we could go into sort of the discussion of music. We can swing back around to this, but there are a lot of players now in this area. It used to just be sort of one or two. Take us through ultimately the streaming services, but on the music side.
Yeah, music is a fascinating area. I cover.
That would be a fun area to cover.
It's excellent to cover. I cover Spotify. I follow their competitors, Apple Music and Amazon Music. I cover the record labels, which are related to the success of the music streaming businesses. And really the big question in music right now is, how long can the growth of streaming continue? How big can streaming revenue get, and streaming being services like Spotify?
And what do you do? Are you measuring like how many people are currently listening to streaming services and just how much further is it? Like, give us a sense of how that's all being figured out.
There's two ways you can grow revenue if you're one of these businesses. You can increase the number of subscribers you have, or you can raise prices.
Right. I have a feeling it's prices.
Prices is a big topic right now. So they've continued to grow the number of subscribers, but interestingly, you may not have noticed, but at the end of last year, your Spotify and your Apple Music, Amazon Music,
it's
hopefully
broken.
not.
It's broken now. You have to pay for it.
The prices went up by $1 a month. And what's interesting is it's the first time that any of these services have raised prices in some of these major geographies. So the question is, okay, you raised prices by $1, but really where can prices go over the next 3-5 years? And so, we can run through a couple of ways to think about that. The first is the crazy stat, which is my favorite music stat, which is that we're spending the same amount of money on music today that we were in the late 90s. Music industry revenue has not kept up with inflation.
Really?
And think back to the late 90s where we're buying CDs, we're buying tapes, but then 2000s roll around and it's Napster. And all of a sudden your computer has viruses and you're trying to burn CDs, and industry revenue completely collapsed. The 2010s saw the rise of the streaming services. And so while we're kind of back at highs, it's adjusted for inflation well below highs. So we're spending.
Interesting.
Yes.
It should make it cheaper. I mean, just in terms of the distribution, it makes sense on some level.
It makes sense on some level, but we're also have a much greater selection of music versus CD era where you would buy individual CDs. So the offering is arguably better.
So who's pulling ahead within? What can you give us a sense of, like what certain companies would need to hit to pull themselves ahead in this area? What do they have to make sure they're doing?
So the clear leader in the area is Spotify, and Apple and Amazon Music are both smaller relative to Spotify, but all of the services are growing and exercising their pricing power. And so we look to things like, okay, what are you spending versus 25 years ago? What happened in video streaming? And video streaming is a great example where,
example.
you know, when Netflix launched, we were spending $8 a month on Netflix, but now it costs $15 to $16. So could music be similar? And then, you know, we're trying to look at things like what happened when they raised prices the first time, which is,
Right.
guess what? No one canceled their Spotify subscription over $1. So
Safe
really,
to do so.
yeah,
Yes.
our job is to say, okay, where could prices go over the next 3 or 5 years? And what does that ultimately mean for the growth and the margin potential of all the businesses that are tied to this music streaming trend? And, you know, keep an eye on your Spotify prices.
I know, I'm not that happy about it, but I'm happy for the company making lots of noise. That's good. Okay, so this is another one, online dating. I think you covered this area. You've also said that it's off a bit, actually. Are people just not doing online dating? Is that one of the stories here?
Yeah, I mean, I follow online dating, super interesting area to cover, really a study of human behavior.
Oh, yeah.
You know, thankfully, these apps really became popular after I met my wife, or she'd have many more options, but I follow them very closely. So yeah, as you mentioned, you know, as the stock charts of Match Group, which owns Tinder, and Bumble, who's the other key player in the space, would suggest, it's been a challenging period for online dating. And really the story is they've struggled to grow the number of users that pay for their apps.
Okay.
So there's a couple pieces to this. One is that the percent of users who pay is already quite high. And the second piece is users are actually in decline in some core geographies.
And does it have anything to do with the pandemic? I mean, again, people are out and don't maybe need to use this type of service in the same way, or is that part of the story?
The pandemic impacted trends, of course, in 2020, 2021, but things have kind of stabilized now, or the pandemic impact has stabilized. Really what's happening is you're seeing, you know, a maturity of my generation out of dating apps, and the generation below us not adopting them to the same degree.
Why not? Do you have a sense of?
There are a number of different theories on it, ranging from they just don't like.
You watch this. What is it? Not theories. What's actually happening here?
So I think that the behavior seems a little different, and the mechanics are arguably a little dated. Okay. So if you think about a swipe mechanic in Tinder, when that was the only game in town in 2015, and all my friends were single, they're on Tinder and they don't mind the swipe mechanic. But
it's not.
It's newer competitors, which have gained some ground, have different mechanics that are a little more involved, a little more in depth to the profiles. And that is really what's become popular. Okay. And so the big question is, if you are one of these companies, if you are Tinder or if you are Bumble, and you rely on this swipe mechanic, hey, could I reignite my user growth if I change that?
Right. Could it be as simple as changing the techniques, ultimately the technology?
Could it be that? But the issue you have to contend with is, well, if I erase swipes, I charge people for swipes. So what happens to my existing base? So, you know, these companies are going through a real transition to try to reignite user growth. And what I'm doing, I'm digging in, I'm meeting with the management teams, going through the data and trying to understand, okay, is this something that can turn, or is this really a structural problem? And these companies are going to suffer for quite a while.
Fascinating. There are actually a bunch of questions coming in here, and we will get to them. I just want to talk a little bit about the story of generative AI. It came on fast and furious, as we know, towards the end of 2022, and since then it's been endlessly interesting, and to the point where it's, you know, we almost talk about it maybe too much. I don't know what you think, but tell us how it is useful for the way you're looking at these companies that you're following. Obviously it is.
It wouldn't be a tech-based Fidelity Connects if we didn't talk about generative AI. It's been a huge topic, basically since the rise of ChatGPT, which has happened over the past year or so. Yeah. And really the biggest debate in my space about generative AI is how it will impact Google search.
Totally. And so, is it just another way to search that's better? That's the debate. And so there's basically two schools, and I'm happy to run through the debate on either side. So kind of the bearish view would be, hey,
Google is going to be forced to include a lot of generative AI answers and content in your search engine results page. And that's either going to cost them a lot of money, or it's going to mean they can't show you as many ads, or both. And then the uber bear case is we're not even going to use Google. They can't keep up on the technology, we're going to use something else that looks totally different.
Okay.
And then the other side of this is the bull case, which is, the first piece of it is that Google will be able to keep up technologically. So they invented the technology behind ChatGPT, and they have cutting edge models themselves. And that on the piece about disrupting their advertising business, the bull view would be that Google's in control of their own destiny and that they can manage the rollout in a very measured way. And that's because they have distribution advantages through the Chrome browser we use every day, through that relationship with Apple, which means Safari browser always goes to Google.
They've got the presence there.
So they have the presence.
So is it theirs to lose in a sense?
It's theirs to lose in a sense. And, interestingly, we use Google for some things which generative AI answers are awesome for. And we use Google for some things that it doesn't matter at all. So they have the audience, they have the presence. Search market share has not moved over the past year. They remain dominant. And so it's really up to them to, it's the bull view would be it's theirs to lose. So really over the next year, they're going to be rolling out a lot more generative AI into our search engine results page. It's super early. And so watching this evolve and tracking how this rollout is impacting the business, if at all, is really a key job of mine and something I'm very focused on.
Fantastic. So we know that your eyes are on it. Let's go into some of the questions that are here. So one of these is, are users still accessing social media, David, for news content or primarily entertainment? And does it matter? You can advertise on both, but what are your thoughts?
It's really a mix. I mean, social media has broadened as a category since its early days. In its early days, it was basically just friends. Now it's news, it's friends, it's videos, it's pictures, it's a messaging service. They've turned into these larger apps with a number of different use cases, all of which are quite popular.
All of which, okay. And so it doesn't matter, they kind of do it all. To what extent in that broadening is data the goal? I mean, where is the race for data and who does it best to then ultimately sort of come back to the AI? Sorry, couldn't escape there. We'll come back to it for a sec. But, of all of the companies that you've mentioned, they are all superior at gathering data, of course, and many other companies too. To what extent is this all sort of priced into the valuations of these stocks at this point? Gathering data, how important is that?
On the first piece, what you've seen is basically the largest players do the best, and privacy changes have made gathering data to be used for targeting advertisements or for attributing the success of the advertisement back to the ad platform more challenging. And so there's been a need for increased investment and new types of signal. And really what that's done is raise the moats of the largest platforms who have the most data on their platform, where advertisers are willing to spend the time and effort to adopt their tools. And you've seen some of the smaller platforms, I guess, not really keep up in that respect. And for advertisers, they're like, well, I'm only spending a little bit of my budget here. I'm not going to bother integrating all these tools. And so it's really the largest platforms that have been at the cutting edge of this, Meta in particular.
Meta was renamed to talk about the metaverse. There's a question coming in here. David, what happened to the metaverse? Is it a fad that's run its course? Yeah, your comments. I mean, you watch this company all the time, and that was obviously a big branding move.
Definitely a big move. I think what you've seen is they're still spending a significant amount of money on the metaverse, but as they've improved their margins in the core business, and the core business has resumed growth, it's become a smaller part of the story. What I'll say is few are counting on this being the next biggest business in the world when they're looking at the stock. And so if it becomes a huge thing over the next 10 years, who knows? Maybe that's great. But for now, it's basically an expense line within the business.
I wanted to ask you about internet players who are obviously selling within the apps that they are, and you can kind of go across probably many of the companies here. I was just listening to a discussion about, so the better and better that gets, where you can just buy within the app with more ease, and it's targeted, better advertising. I think you had mentioned in some of the reels that you discussed, like the advertising is sort of taking on the mood of the types of reels and things. Maybe you can talk about that a little bit in a second. But just this idea, as everything gets better, to have the buyer click and buy right there, is there anything to sort of the distribution, final mile delivery of such items being bought, if they are in fact items? Does that piece need to come together for some of these companies to do well? Is it a big piece of the story?
So yeah, you're right. The interesting trend that's going on is within a lot of these social media apps, it's getting more and more smooth to act on buying the good that's advertised to you within the app itself. So not even leaving Instagram or TikTok or Pinterest, and just making that buying experience really smooth and in-app. That basically increases the likelihood that you will transact, which makes the ad more valuable. It also improves the data that the platforms are able to gather to serve you relevant ads in the future. And, if you're the advertiser, of course, it just helps you sell more. So that's been a trend. In terms of the delivery aspect of it, the large the large social media platforms themselves are not trying to do the delivery themselves.
Right.
The delivery works the same way as if you went to whatever the merchant's Shopify powered app store website would be, right, and bought there. So it's third-party delivery, doesn't impact them. It's really just about the ad formats.
About making the sale itself.
Exactly.
Tell us a little bit about mood advertising. You'd spoken about this, and then we'll get some of your final thoughts. But this idea that the advertising gets better and better and a bit more appropriate, is that the right word? The reels themselves have sort of a mood or a discussion, and you want to kind of slip the advertising in an appropriate way.
Yeah, what you need to have is advertising that matches the media format that you're in. And so you have, when you're scrolling through your feed and it's pictures of your friends, if you get a picture of something else and it looks kind of aesthetically similar, it's not jarring. But if you're scrolling through short videos and you just get hit with a still picture, right, it's a little more jarring. It's not part of the same, it doesn't feel the same. And so what some of the players are doing is creating these AI tools that let advertisers easily create advertisements that feel native to the type of content they're next to. So they'll help you create a short little video that you can insert into reels. And so, it feels much more natural. So
they're actually helping on that side. So just as kind of a couple of final thoughts, what do you think investors might want to watch as a couple of key themes across a lot of these companies, a lot of these areas within the internet world? What should we be watching for over the next, 6 or 12 months?
Yeah, I think that the evolution of digital advertising demand and the growth drivers we talked about, the durability of those will be important. Reels, things like advances in ad tech, things like big versus small competition. That's important to keep an eye on. Keep an eye on music streaming prices. Is your Spotify price going up? Keep an eye or talk to your single friends about whether Tinder's page is changing. And of course, on Google, look out for your search engine results page and how that changes. But at the end of the day, internet is a super dynamic sector. Yeah. There's going to be some big winners, some phenomenal businesses with durable growth and huge moats within internet. And there are other businesses that are going to be challenged. And so here, it's our job to do the work, to do the deep research, and to make sure that we get the good ideas, the winners, into the client portfolios.
David Cochrane, a delight to have you on the show. Thanks.